Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. This is where we will help you understand the closing action on the D Street. As we inch closer to the last 1 hour of trade, you can actually see that the markets have turned absolutely flat. We're just about 5 points higher in trade as far as the Nifty is concerned. 19,788 can be seen as the clear level. Constantly for the third consecutive day, we have been failing to hold above that 19,800 mark. That's is emerging as a critical resistance. The Nifty Bank is down in trade, 0.7% lower, and so the heaviest weightage index is not really providing any support. There's also a mixed trend when we talk about the sectoral moves. So you're looking at both the Nifty Bank, private banks, realty, metals, all down in trade in today's trading action. The PSU banks, definitely the ones that are losing the most in trade. You can see a 1.25% loss for this month. The small caps have slipped over 1% now in trade, so the broader markets are also trading mixed at this point in time. It's barring the healthcare, IT, auto and FMCG space. Rest of the sectors are actually doing pretty sluggish in trade. But a lot of moves being seen on an individual stock level. When we talk about even the benchmark index Nifty, you do see names from the pharma index definitely coming up in trade. So you have Dr. Reddy's and Sun Pharma up in trade. You have BPCL as the top gainer in trade today. Cipla, Power Grid, Apollo Hospitals, NTPC, Hero MotoCorp emerging as some of the top movers. You also have some IT names like Tech Mahindra and Infosys providing some leg up right there on the markets as well. In the F&O space, it's Aurobindo Pharma as one of the top gainers apart from BPCL. Then we also have Jubilant Foodworks, Z Entertainment and Hindustan Copper as the other movers in trade. Shell, how do you really look at the current markets? You know, we've been discussing time and again that till the time we do see election results come in, perhaps this sideways and consolidative move may continue in the markets.
Yes, Sakshi, I think the Nifty is given a very, very strong opportunity intraday. While we might think of it in terms of a flat trade, just an 8-point uptick at 19,790, far from it. There's been a very, very nice volatile intraday trading happening. There was somewhere like 100-point fall on the Nifty from about 10 a.m. and it sunk all the way down to 19,715. And from there, the 19,700 call got activated at about 62 rupee levels, and it is now at 121 rupee levels. Money is almost doubled in a span of about 2.5 hours. Very, very strong momentum and support coming in at 19,700. So buy the dip, as we had suggested in the morning note, seems to be working pretty well. You just need the market to come on one side and then get into the long side as far as trade is concerned. You've mentioned what all has happened as far as the large caps are concerned, but the action is in cash counters, and let me mark a few. Two of them, one is CG Power, which is now up 20% and showing very, very strong momentum on the long side. The volume on CG Power is phenomenal. 1.56 crore shares have been traded. 469, the counter is already at a record high. The parent of CG Power is actually Tube Investments. We'll take a look at Tube Investments as well. 12% higher, 3562, and about 16 lakh shares have also been trading here. Remember, these are two companies of the Murugappa group, very, very well-known corporate group from down south, and they are paragons of corporate governance, something that gets rewarded very well in the market. So CG Power and TI India are two stocks that I'd like to highlight. Similarly, the entire insurance space is in very good form. In the morning, we had started with two stocks, SBI Life at day's high and fresh record high, 1434. This was given by Mileen Vasudev, as also Aurobindo Pharma. Again, a fresh high, 1054 is the last price that I see. So these are the kind of momentums that we are chasing, and of course the 19700 call on the Nifty. As far as Bank Nifty is concerned, a bit of a disappointment there. It's the weekly expiry for the Bank Nifty today, and the index slipped below the 200-day mark. We have about 45 minutes left in trade. Let's see how it looks as far as markets are concerned. But today is the day to look at IPOs, and good news coming in from the Tata Technologies stable. The company has fully subscribed as far as the first hour of trade is concerned, and there's still 2 more days left. But in focus today will be the Fedbank Financial Services IPO. Mr. Anil Kuturi, the Managing Director and CEO of Fedbank Financial Services, joins us. Very warm welcome to you, Mr. Kuturi. A wonderful time to be in the markets, and of course there is a lot of demand for quality stocks from subsidiaries of parents who've done phenomenally well. Your bank, the parent Federal Bank, is hovering near record highs, and this would be a very good chance to get listed in the markets. Firstly, I'd like to ask, why is there a necessity for the NBFC of a very well-known old private sector bank to be listed in the first place?
Good afternoon, and thanks for having me over. So Federal Bank is a private bank, and Federal Bank caters to the established self-employed and salaried customer like most private banks do. And FedFina was founded to cater to the needs of the small self-employed customer. So our mission statement says that we are here to empower emerging India with easy access to loans. Okay, what this means is that we cater to the needs of the small self-employed customer. Now, we've been in business since 2010. In 2018, we got investment from a local private equity player called True North. And now here we are trying to access the capital markets. This is to raise money and to grow further. Okay. Now, we are an entity that's distinct from Federal Bank, and Federal Bank has a majority stake in our company. Federal Bank has recently raised capital to grow for its own needs, and that's the capital that investors have entrusted Federal Bank to grow its own businesses. And we believe that the right thing to do is to showcase FedFina's business to prospective investors and seek to raise capital for the work that we are doing. So here we are with our IPO.
Great. Good afternoon, Mr. Kuturi, and great to have you with us on Business Today Television. You know, we will discuss more in detail about the IPO and your business insights and the outlook going forward. But this IPO also comes at a time when the RBI recently has taken a very stern measure of increasing the risk weightage for unsecured loans. I wanted to understand, how do you view this recent step, and you know, how big is your unsecured book? What will be the impact of this decision that you are gauging right now?
Yeah, so I'll answer all 3 questions. First up, the Reserve Bank has rightly been concerned about the huge growth in unsecured loans for consumption. And it has sought to regulate the sector, put some guardrails to ensure that the growth in the sector is sustainable, so that neither borrowers nor lenders have poor, unhappy outcomes as a consequence. So to that end, I think the regulations are welcome. Now, as far as our business is concerned, we don't lend for consumption. We only lend to small self-employed customers for their working capital requirements. We do this through pledge of gold, mortgage of property, and unsecured. So all our unsecured loans are loans to existing self-employed customers, entrepreneurs, to help them grow their business through enhancement of working capital. Now, our unsecured portfolio is between 14 and 15% of our AUM, and the bias is towards reducing this quarter on quarter. That's because our mortgage loans have a longer tenor. They have a behavioral tenor of about 8 years, whereas the unsecured loan book has a behavioral tenor of 30 months. So the portfolio will continue to get enriched through mortgage loans. So that's as far as our portfolio is concerned. Now, finally, in terms of impact, all the loans that we do in FedFina are to the priority sector and are eligible for classification as such by our lenders. So potentially all borrowings that we do are for onward lending to the priority sector. So therefore, the impact in terms of borrowing cost to us should be muted. But having said all of this, it's early days for the circular as yet. And, once we are done with the IPO, we will engage with our lenders and dimension whatever outcome there is.
So on your capital adequacy ratio, if you've understood, can you share with us how many basis points of an impact do you gauge as of now, and on your margins as well?
So in terms of our capital adequacy, we believe that because the loans that we are doing are for working capital and not for consumption, they may not attract the higher risk weightage. So therefore, there should be no impact on our capital adequacy is what we believe. Okay. And in terms of our borrowing from banks, which are our primary lenders, while the risk weight on lending to NBFCs has gone up from 35, which in our case to 60%, that should have some kind of an impact on terms of increasing our cost of borrowings, but that is counteracted by the fact that we lend for priority sector. So on the balance, I don't expect too much of an impact. And the exact dimensioning of this, we will do over the next couple of weeks post the IPO is done.
Okay. Mr. Kathuri, let's just get into some details as far as the balance sheet of your company is concerned. I'd just like to know what is the fresh slippages to total advance ratio. It should ideally be below 0.25%, but in your case, it's substantially higher. What are the steps that you are trying to do to mitigate this increase in net NPA?
All right. There are different components of our NPA, and let me just decompose them for you. Okay. Roughly a quarter of our NPA is from a historical wholesale book. We used to do wholesale lending till about 2018, and we stopped that. So there's a vestigial, bit that is left. So that's one part of the NPA. The second part of the NPA is one that is transient. People that borrow against gold. Okay. So at the 90th day, they become NPA, and we allow them a further 60 days to regularize, before we enforce the collateral. And there is simply nobody beyond 150 days past due. So that is the second part of the NPA, which is to do with gold loans. The third part of the NPA is against mortgage loans. And these are self-employed customers whose loans, whose lives are uncertain in that their cash flows don't follow the steady pattern that salaried individuals' cash flows do. So there are, slippages on that account. But however, you look at the aging of these NPAs, I can confirm that there is simply nothing that exists beyond 720 days past due. So all the NPAs that we have ultimately end up regularizing or getting corrected within the passage of time.
Right. Let's now look at how the IPO has been priced. We of course have all the pricing details in front of us. But Mr. Kathuri, I'd just like to raise a point that one, you are in an extremely competitive sector as far as the lending in NBFCs is concerned. And if you look at the valuations at which the IPO is coming, it's double in terms of PE compared with the average PE of the sector. So is that something that you can defend as far as initial investors in your company are concerned?
So let's just start by looking at the kind of advantages that we have as Fedfina. We are a subsidiary of a private bank, so therefore the market lends to us at a very low rate. Our cost of borrowing for the year gone by was a full 100 basis points less than companies which are 2 notches higher than us in terms of credit rating. So that is an advantage that we have. We have access to a market that is underserved, and we've been growing quite rapidly. We've invested significantly over the past 5 years, and we have almost 600 branches on the ground, all of which are in business every day and will help grow our AUM. Now, as a consequence of all of this, what has happened is that our profit has been increasing multifold year on year. In 21, we were at 61 crores. In 22, we were at 103 crores. And in 23, we were at 181 crores. Even for the first quarter of FY24, our profit after tax was 54 crore rupees. Okay. So you can see that, we've been a high growth company, and to take a snapshot of any 1 year and use that as a basis for, pricing may be limited. Instead, what I think the market is looking at, and this is a feedback that institutional investors have given, is that we are growing very rapidly. Our profit is growing rapidly. So therefore, we are priced at something like 1.9 to 2 times FY25 book, and which makes us amongst the cheapest in terms of, a comparable pool of NBFCs.
Mr. Koturi, wanted to quickly ask you on credit demand right now from your key verticals. Where are you seeing the highest demand, and what is the outlook for the next 6 to 8 months or so? During a lot of political gamut will be in focus during that time.
So the customers that we lend to, the small self-employed customers, are an integral part of the social and economic fabric of the small towns that we do business in. So they provide what you may loosely classify as essential services. So which means their businesses are not impacted by by larger events like either elections or geopolitics or things like that. Like say the events which impact, for instance, something like the stock market will not impact the small self-employed customer, somebody who runs a roadside canteen or things like that. Okay, so the demand in this segment is very stable, and also when untoward events like COVID don't happen, the performance of this segment also tends to be within a band. So that's as far as demand and performance is concerned. In terms of growth, I think given the fact that this segment is hugely underserved, the growth that we will have is the growth that we are capacitized to do and the growth that we will seek out. Given that we employ almost 4,000 employees in 600 branches, I think we have a reasonable presence on the ground to cater to this underpenetration and to feed our aspirations for growth.
Okay. Sir, also wanted to understand from you, there is a key risk that a lot of broking houses have talked about, that your concentration in the assets under management is just concentrated into 6 states as of now. What is your plan of expansion? Are you looking to broadening your services and your horizon?
So we are present in 17 states. Okay, this is up from 4 in 2018. And each of the new states is building up AUM quite rapidly. Okay? Our largest state is Maharashtra, which accounts for 19% of our portfolio. And even this 19% is across 3 kinds of products: gold loans, mortgage loans, and unsecured loans. So there is no single product market segment which caters to even 10% of the overall portfolio. Now, as we do business and as the newer branches build AUM and catch up, I think the concentration per state will only come down. And finally, you look at us and compare with any other NBFC our size, you will find us the most diversified NBFC in the industry.
Right. Mr. Koturi, our final question to you. The RBI has also highlighted the severe level of attritions in private sector banks, and your company is also not immune to it. About 18% attrition is what we see from the DRHP. What are the steps that you are taking to ameliorate this pain and probably result in lower, salary costs?
So the market for talent is hot. Okay, that's because the number of people expanding in small town India is increasing. So therefore, people like to hire experienced people from other organizations. That's a fact of life. Now, what we do is that we seek to provide our employees a good experience when it comes to working within Fedfina. We recognize that people spend maybe 3/4 of their waking lives at work, so they should do something that imparts meaning to their lives and that gives them a satisfaction beyond the fact that they're providing for their families and making a living by working. Now, we've defined a set of values that we will live by. They go by the happy acronym of EPIC. This is execution excellence, people centricity, customer centricity, and integrity. So, four of the four letters put together, they form the happy acronym of EPIC. We also have a lot of employee initiatives, and we are certified as a great place to work and have been right for, over the past 5 years. And these are some of the initiatives that we've taken to ensure that our employees stay with us. Other than, over and above, of course, remunerating people well and making it worth their while to work within Fedfina.
All right, Mr. Kuturi, all the good luck to you, and we hope that you get the best response that you've dreamt of for the IPO which is in the market. 1092 crores is what Fedbank Financial Services is raising at a price band of 133 to 140 rupees. The issue is open between November 20th, 3rd and 24th and should be listed by the end of November. Very, very sincere and deep best wishes to you, sir.
Thank you. Thank you for having me here, and thank you for your good wishes.
Okay, and before we get into a very short break, I'd like to highlight the 19700 Nifty call option, which is now at 147 rupees. The Nifty itself is now 21 points higher. A short break, and on the other side of the break is Shahina Mukaddam waiting for us to share her views on where the markets are headed. We'll be back shortly.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back. You're watching Market Today on Business Today Television with me, Sakshi, and Shell Bhatnagar. And now we have with us another special guest. Shahina Mukaddam joins in, market expert. Shahina, we were speaking to the management of Fedfina Financial Services, and you know, IPO is the flavor of the season. Before I ask you on the Nifty, I wanted to ask you, apart from Tata Tech, where else are you looking at advising investors to take a pick from these 5 IPOs that have opened?
Of course, Tata Technologies, you'll be lucky if you get that. And also, I think Fedfin also should be reasonably good, considering that the management is quite optimistic as to maintain the profitability and at a reasonable valuation of less than 2 times book. So I think both can be looked at.
Okay, Shahina, a very warm welcome to you at Markets Today. Let's look at how the sentiment is on Dalal Street at about 19,800. We seem to be in a very, very fine shape as far as the Nifty is concerned. A lot of sectors like pharma, a lot of sectors like IT helping the index up. But it's the banking space which is in terrible shape. The Nifty Bank, actually one of the best performing indices over the last so many years, is now one of the worst performers. How are you seeing the banking space, mostly on the private banking side, and what do you think represents value at this point of time which investors can add to their long-term portfolios?
After a good phase, I would say, of for the banking sector as a whole, which includes actually the PSUs did better than the private sector in terms of stock performance. Having said that, I think this softness in the overall banking sector, which is reflected, of course, in the overall banking, I think across the board, private as well as even PSU stocks are correcting a bit. I think this gives you an opportunity, maybe not currently, maybe at slight further dips, because most of the banks are showing a bit of a corrective phase. So I think at dips, one can look at investing, because if you take a slightly longer term view, we are likely to see the private sector banks take market share from the PSU banks. And I also believe that they are building in terms of their profitability. Their book is much better in terms of their NPAs. They have managed to bring it down, low NPAs. So I think one can look at dips. And my favorites, of course, would remain the two largest ones, which in the private sector, which include the HDFC Bank and ICICI Bank. Both have shown some softness, but I think if you're looking at a 3 to 5 year view, these look good for investment at slight dips.
Okay, understood. But from the banking space itself, I wanted to understand from you, Shaina, what about the PSU banks? The kind of fall that we are seeing here after the stellar rally. Have you been looking at the kind of fall? Is this a buy on dips opportunity?
Yeah, it's the same thing. See, the RBI is tightening norms, as you just discussed with the management from the space. So, to some extent, I think there's a wait and watch in terms of what is the impact on the numbers that is likely to come out over the next couple of quarters. But I think they're all, the balance sheets are they're pretty strong across the board. I think for the private sector and for the larger PSU banks. So, if I was to take a pick in the PSUs, which actually, if you see, their NPAs have come down substantially. If you take a last 3 year point of view, balance sheets are pretty good. Growth is there in double digits. So I would look at some of the larger ones. Of course, SBI tops the list. You can also look at some of them like Canara Bank, your Bank of Baroda. I think these also look interesting.
And from the second rung PSU banks, where would you be bullish? Something like an Indian bank, City Union Bank was mentioned by Shell, I think yesterday as well, with the kind of stunning moves that we've been seeing. The second rung PSU banks, do they still have value?
I would still go with the second rank PSU banks in the private space. So something like a federal bank, I mean, of course, it's rallied. So you can see some bit of correction in the shorter term with the rest of the banking space. But I think something like that. And then you have some of the other smaller private sector banks that would look better in my view, rather than go to the smaller PSU banks. I would rather avoid that.
Right. Shaina, let's put artificial intelligence aside, although that's in top news, and use human intelligence of yours to construct a wonderful portfolio at current levels. As market people who view markets on a regular basis, where do you see value at this point of time, and what would you recommend to be added to long-term portfolios at current levels?
Well, when I look at a portfolio, long-term portfolio, because now my long-term portfolio means average 10 years, 5 to 10 years. But I think most of the market participants look at it from a 3 to 5 year perspective. Given that, I would look at pharmaceuticals as of now, and I could look at investing. And see, I would just like to say that the disclosure being that I would have been investing or invested in most of the stocks I'm talking about. So in pharmaceuticals, I would look at something like an Aurobindo Pharma. And while the stock has doubled, in the last couple of months, I think going forward from here, there is an opportunity for it to do better and give you a good return, because the valuations are still attractive. You can look at Dr. Reddy in the pharmaceutical space. I think there the stock is consolidating, but because of some issues with FDA. But I think if you are investing at dips and hold it for the longer term, you can make good money. Then I would look at the auto sector. We've been hearing Bajaj Auto. They are doing pretty well. So two-wheelers, you can look to invest at Bajaj Auto. In the four-wheelers, you can add Tata Motors, you can add Maruti. So, you have number of stocks in each of the sectors. Let's go down to FMCG. I think ITC has been a considerable, has given a very good return in the last 1 year. Even having said that, I think even from here over the next 1 year, there is an opportunity to make a 20-25%. So, for a 3 year portfolio, that could be another one additive. So you have banking, which we already discussed, my topics being ICICI Bank, you have HDFC Bank, and also in the PSU space, you can add one of the large PSU banks. So like this, you can go down sector by sector, and each and every sector at every point in time, I see you have stocks that you can invest in for a long-term portfolio, build your portfolio and hold it for the long term.
Right, Shahina, that's a very decent portfolio to have been made. What can we do? Prices are something that are given to us by the market. Therefore, Aurobindo Pharma, it's at a record high. Bajaj Auto is at a record high. That is for today, but maybe a subsequent year, 2 year down the line, these prices might look really affordable in hindsight, and that is how markets are structured. Of course, within the banks, Shahina likes ICICI as well as a couple of PSU banks. A good time as any to welcome Nilesh Jain, AVP Technical Research at Centrum Broking. Good afternoon, Nilesh, and before we put a very tough question to you, we'll also look at the Nifty 19700 call, which we've been tracking since 61 rupees. At the moment, trading at 154. A very sharp rally on an intraday basis coming into the Nifty. Your view on the index, and then a particular stock that you like on the technical charts.
Very good afternoon to everyone. So today we have seen a very good rebound from the lower levels, specifically in last couple of minutes. The kind of recovery that we have seen, I think Nifty is making an attempt to end and close above 19,800. So those attempts were made in last 3-4 trading sessions. Those were the unsuccessful attempt. But it would be very important to see whether Nifty manages to close above 90,800. Because tomorrow we have a weekly expiry, and if Nifty manages to surpass 19,800 decisively, then there will be another round of short covering move which will open upside towards 19,900 to 20,000. Looking at the overall structure, we are slightly on a positive side. So at current level, Nifty 19,750 call, which is trading near about 107, 100 to 107 zone, that can be bought on declines, and we expect this particular option to move towards 150 to 200. One can keep a stop loss below 60. So one can take a position in the options to play the long side. Bank Nifty, an interesting setup today where it has tested its 200-day moving average. That's the major support that it has defended. And looking at the overall structure, we expect some pullback in the banking space towards 43,600 to 43,800. So purely from a pullback point of view, Bank Nifty, one can go long for the upside target towards 43,600, 43,800. One can keep a stop loss below 43,250. Lastly, if you look at the volatility index in the weeks today, after a rally of 4 to 5 sessions, it has cooled off by 3% to end below 12 level. Currently, it is at 11.85. It looks like we might see some further pull off in the IV, so that will certainly pull the index on the higher side.
Nilesh, good afternoon. I wanted to take a few stocks with you which have shown substantial move in intraday trade today. Shares of Tube Investments are in the green for the third consecutive day. It's up 12.6% higher. The stock has been on an uptrend in the last 6 months as well, 33.6% higher in trade at about 37.54 at day's high, 17.5% higher now. What would you really do with the stock?
Well, Sakshi, the kind of run-up that we have seen today, usually we see a lot of illiquidity, volumes usually dry, and today we have seen a good price and volume breakout. So there could be possibility of a further follow-up move in this particular counter towards 3850 to 3900. But it is not advisable to chase this particular momentum because the risk and reward is not favorable. So if somebody is already holding the long position, can continue to ride this rally. And if somebody is looking to make a fresh entry, I would suggest to wait for some decline towards 3550 to 3600. The structure although looks strong for 3900 plus sort of target.
Okay. Both CG Power, the subsidiary of Tube Investments, is up by almost 20 odd percent, spotted by Shell in the early part of this show, and Tube Investments. Both of them are strong in trade, but for Tube Investments, Nilesh asks investors to avoid chasing the momentum at this point in time. The other one that I wanted you to look at is eClerk Services. Again, this stock has hit an all-time high level, and the stock has been in an uptrend for this entire year so far. 113% of a surge has already been seen. Intraday trade today 14.2% higher at 2670. What would you say here?
So another breakout can be seen in e-clerks as well. Counter is constantly forming a high top and high bottom formation. And earlier we saw big rounding bottom breakout near about 2000 level, and it has a good setup, and it looks like it is heading towards 2800 to 3000 sort of figure. But again, as I mentioned, it has a similar structure where it is not advisable to chase the momentum. It is better to add in a staggered manner. It's a good portfolio stock for the upside target of 3000 plus as a position target. One can keep a stop loss below 2400. It has a structure of a buy and decline sort of.
Right. Let's get Shahina into the conversation. Shahina, we've already seen a very strong performance coming in from corporate India when it comes to second quarter earnings, and of course a lot of upgrades from brokerages have happened. Against this background of sterling performances by blue chips and mid caps, has your mind changed? Have you added mid caps into your thought process, which could perhaps be a part of long-term portfolio? Any mid cap spaces that you prefer at the moment?
Well, yeah, I think mid caps, one always needs to have about, say, 25-30% of your portfolio in good quality mid caps, because that is where the large kicker to your overall portfolio does come. So if you look at the last 6 months, I would have added a number of mid caps. Like, for example, in the FMCG space, you have decent mid caps. Like you have Vadilal, that looks interesting in terms of the opportunity going forward. In the FMCG space, you have something like an Emami that looks decent. So I think in the banks you have some smaller banks that look decent if you're looking at the medium to longer term portfolio. So you can always, then you have some in the brewery sector that look decent. So you have different sectors that are offering you opportunities in the mid cap, but I must say they're pretty, I mean, some of the smaller ones are pretty liquid at times. So, one needs to be really careful as to the timeline which you're looking at for the investment.
Fair point. And with that, Shahina's time with us draws to a close. Thank you so much, ma'am. And we look forward to listening to your views again very shortly. Have a nice day. Okay, back to you, Nilesh. And for you is a question on Bharat Forge. One of the few stocks that has now started to rally substantially. The 1100 call will be there in front of you, priced at, let me just see, I think 15 rupees. What is the chart of Bharat Forge telling you?
So Shalvi sir, I forgot to give my recommendation. So first one that I picked up was Bharat Forge. So it's a buy at current level. Looking at the breakout today, it has given after a consolidation of previous 2 weeks now. The structure looks strong, and we are witnessing some amount of short covering this particular counter. And it looks like it is heading towards 1120 on immediate basis, and then 1140 to 1150 would be the next target. So yes, call option can be bought in this particular counter of 1100, which is trading near about 15. One can keep a stop loss below 9 for the upside target of 21. That would be the first target, followed by 28 and 30. So Bharat Forge looks positive, and the stop loss in the underline can be kept below 1080. So the another counter that we are liking is JSW Energy. So that particular counter is also looking positive today. It has given a fresh breakout from a consolidation zone. A buy crossover can be seen on momentum indicators and oscillators. So JSW Energy is looking positive for the upside target of 430 to 440. One can keep a stop loss below 405.
Nilesh, top sector again today is Nifty IT. It has been on an up move for the last few trading sessions, and we've been seeing large cap IT names really coming back in flavor. Any particular stock that comes to your focus and where charts look very, very attractive at the current levels?
So Sakshi, as we discussed in our previous interaction as well, so Nifty IT index looks very strong to me from next 2 to 3 months point of view. The kind of run-up that we have seen in the Nasdaq Composite Index, which is merely 4% away from its previous all-time high. So we might see a patch-up rally in the Nifty IT index in the Indian equity market as well, where the Nifty IT index itself is heading towards 33,000 on immediate basis and thereafter 34,000. So these are the two levels that we are expecting in the Nifty IT index. So the stocks that are looking positive within this space would be, first one would be TCS. It looks positive for 3600 to 3650 from a very short term point of view. 3480 should be the stop loss. SCL Tech is another counter where we have seen a big breakout earlier from the levels of 1260. So 1260 should be the stop loss. The upside is open for 1360 to 1400. So these are the two specific counters that we are liking within IT space.
Okay, great. The other space that I wanted to discuss is pharma space, which Shell was also discussing with Shahina, and we've discussed a lot of stocks here. Would you also throw your weight behind Oro Pharma itself? Is that the best pick right now from the pharma play, or would you actually look at something like diagnostic majors? We've been seeing a lot of action over here too. Ipca Labs, Divi's Laboratories, Loris Labs, and today even Morpin Labs is up in trade, 8% higher. It's in fact up in trade for the 5th consecutive day. So why don't you throw your weight on the main pharma plays as well as the diagnostic majors?
So second best sector that is looking very attractive, that is pharma, where we have seen a sort of falling channel breakout coming in near about 15,500 levels, and the Nifty Pharma Index is trading at all-time high levels. So looking at the structure, it looks like it is heading towards 16,400 to 16,800. So that's the near-term target that we are expecting in the Nifty Pharma Index. Stock that we are liking within this space is, first of all, index heavyweight Sun Pharma, which has again hit a fresh all-time high today. The structure looks very strong, and the upside is open for 1225 and 1260. These are the two targets that we are expecting. 1180 should be the stop loss. The second stock within this space that we are liking is Cipla. So looking at the structure, yesterday we have seen a fresh breakout in this particular counter, and today we have seen fresh OI addition of roughly around 5%. So long buildup is happening in this particular counter as well. So one can keep a stop loss below 1250 for the upside target of 1300 to 1325. So Cipla, Sun Pharma, Dr. Reddy, these are the few counters, few names that we are liking from Nifty Pharma space.
Okay, Sun Pharma, Cipla, Dr. Reddy is the top preferred stocks from the pharma basket by Nilesh. I'll take a very, very short break right here. But when we return, a lot of other stocks, including Balrampur Chini, that Shell will check. So do stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back to Market Today. A lot of mid caps are buzzing in trade today, and among them, of course, is Balrampur Chini. This is a stock that we had touched base right early in the morning. At the moment, about a 3.5% rise in open interest as far as the futures are concerned, and 463.70. Strong volume action here as well in terms of how the number of shares have been traded, somewhere like 23 lakh shares. Nilesh, what are the charts telling you?
A good chart pattern can be seen in Balrampur Chini. Today it has also broken out from a small consolidation, and last 2 months high has been taken out. So structure looks positive for the upside target of 480 to 500 in the near term. And today, if we look at the OI data as well, then 4% OI has been added. So long build-up is happening from past 2 to 3 trading sessions. Structure looks strong for the upside target of 480 to 485. One can keep a stop loss below 450. Can be bought at current level. I would rather advise to buy on decline, so the risk and reward would be favorable. So structure-wise, looking very positive.
Okay, this is the view on Balrampur. Remember, there is a rotation of money happening into the sugar space, and among them, of course, one of the finest balance sheets belong to Balrampur Chini. Now, let's look at stocks that we have marked since morning and which have come up with very smart gains. Of course, we'll start with Aurobindo Pharma, 1058 in front of you, and this is a call that was shared by Mileen Vasudev as far as the early morning trades were concerned. Remember, this was shared before markets open. Fresh record high here and a substantial rise in volume at about 32 lakh shares. Nilesh, would you be kind enough to look at Aurobindo Pharma and perhaps give us another independent view on how the charts look to you as far as this high beta stock is concerned?
So within pharma space, another breakout candidate is Oro Pharma. But looking at the volatility, it is we usually avoid this particular counter. But now it has broken out from a 2-year long consolidation. So for the first time, it has taken out the May 21 high of 1000. So structure looks strong for another 150 to 200 point move, and it is likely to move towards 1150 to 1200 in the near term. So it is advisable to buy on declines, keeping stop loss below 990. And we might see some profit taking because it has given a quite a good run up in last 3 consecutive sessions from 850 to almost 1050. So it is better to wait for some profit taking, then go long for the upside target of 1150 to 1200. Keep a stop loss below 960.
Okay, fair enough. Nilesh, you began when you discussed some of your topics, you talked about JSW Energy, and energy is a space that has been clearly buzzing. I wanted to discuss with you again Coal India, one stock that has surprised many investors through this entire year. Today, Jefferies has again given a bullish outlook, saying that the 23% surge is what they expect. What would your own sense be on Coal India despite the kind of move? Where exactly are we going to go?
So in this particular month, the stock has given 10% sort of move, and this has been in an uptrend from past many months now. So for the consecutive month, for the 3 consecutive months, we have seen a good run up in this particular counter from 220 to almost 320. So after this kind of run up, usually it is followed by some amount of profit taking. So I would rather wait for some profit taking to happen in the range of 320 to 310. So that could be the good entry point. I still feel that the stock has the potential to move towards 360 to 400 sort of mark in the near term. So yes, this has to be the portfolio stock given the fact that this has a good dividend yield as well. So I would be a buyer on declines, keeping stop loss below 295 for the upside target of 360 to 380.
Okay, right. Another space that's been buzzing is the auto space, and we've been seeing a lot of these two-wheeler names really buzz in action. And Nilesh, I wanted to understand from you, how would you be really looking at each of these 3 counters? We know that we have discussed this space with you even before, but the fresh moves, how would you be placed? Hero, Bajaj Auto, TVS Motors, your pecking order in terms of the charts?
So in terms of chart, the order has changed now. Earlier, we were liking TVS Motor over other 2, but now, after a long time, Hero MotoCorp has given a fresh breakout, and it looks like it is on the verge of a multi-year breakout. So it has made a high in the year 2017, then 21. Now, once again, it is making an attempt to break the highs of 3470 to 3500 sort of zone. So if it takes out 3500 mark on the upside, then there will be a sharp run up, which will open upside towards 3800 to 4000. So Hero Moto, looking at the underperformance from this particular counter over the others 2, I think Hero Moto Corp can be bought at current levels for the upside target of 3600 to 3800. So these are the position target, and advisable to buy in a staggered manner, keeping stop loss below 30 to 50. The second best counter would be Bajaj Auto. This counter has been in an uptrend, and I would say in a secular uptrend, this particular counter has been forming a high top and high bottom formation as well. So look strong for 5800 to 50 850 target, one can keep a stop loss below 57, and the structure looks strong for Bajaj Auto as well.
Okay. Quickly, Nilesh, could you tell us any of your BTST or STBT trades?
So one counter that we just now discussed, that is Bharat Forge. So that counter is still looking positive and can be bought as a BTST trade for the upside target of 1110 to 1120. One can keep a stop loss below 1080. So looking at the long build up today we are seeing in this particular counter, I think it might give a good run up for next 1 or 2 trading sessions.
Fair point. Bharat Forge is the preference of Nilesh at about 322 now. We'll now just look at how the markets have shaped up. Of course, record highs is something which is really interesting to track, and both our guests have marked Bajaj Auto. Shahina prefers it for the longer term. Nilesh, of course, has a shorter frame in mind. Nonetheless, at 5780, the finest auto player as far as markets are concerned on the two-wheeler space is now at a record high. For the last 5 sessions, the counter has made successive highs, and this level has come on substantial volumes. The reason why I'm mentioning this is that at the moment it seemed to be appearing to be fairly expensive, which it is, but should there be a correction in the market, this is something that you should look at adding in your long-term portfolios. Now let's look at fresh record highs which we've been tracking since morning. Cipla was also a call given by Milene, 1272, 1.5% higher. Fairly substantial rise in volume today as far as Cipla is concerned. Almost 17 lakh shares have been traded. We'll also look at the 3 stocks that we've discussed: CG Power, TI India, which is Tube Investments, and eClerx. Both of them showing, all 3 of them showing triple digit gains of 10%, 16.7% and 20%, which is the circuit for CG Power. Okay, let's look at
All right, I think, Shell, there is some technical glitch. We lost your audio. We'll try and fix that immediately. But Nilesh, let me continue the conversation with you. On the Nifty and the Nifty Bank, how would you advise traders to really move now?
So Sakshi, as we mentioned that we have seen a lot of underperformance in last few trading sessions from the Bank Nifty. And now looking at the risk and reward point of view, Bank Nifty is currently trading near its major support of 40,300. So that is the that should be the stop loss for the long position, and one can play for a pullback trade. But out of these two, I'm still having more conviction on Nifty. Looking at the sectorial rotation, sectorial participation from the IT, pharma, I think Nifty is likely to move towards 19,900 mark. So at current level, or on declines, it can be bought keeping stop loss below 19,700. We expect further upside move to continue towards 19,900 to 2,000.
Okay, fair enough. For tomorrow, how would you be really trading the sectors in terms of sectoral moves? Where are you keeping your focus in?
So rather than sector, we are preferring the stock-specific moves, stock-specific action. So within OMC space, we are liking BPCL. So for tomorrow, BPCL looks positive for the upside target of 410, 415, and one can buy at current level, keeping stop loss below 394. And apart from that, we are also liking one FMCG counter, that's ITC. So after a long time, we have seen some sort of a reversal in this particular counter. So ITC looks good for a pullback to continue towards 445 to 450. One can keep a stop loss below 434. That's today's low. So ITC, the structure looks very interesting because it is available at a multi-year support levels. So looks attractive from a pullback point of view. And lastly, Bata.
Axis Bank, the stock is back in 4 digits and closing somewhere above the 1,000 rupee mark, at least 1,001.9 in as far as futures are concerned. And the fact that tomorrow is a fresh weekly expiry for Bank Nifty, which has fallen 5 successive days in a row. Bank Nifty as well as Axis Bank is something to be looked at. And the other counter is Bata. The stock is now bouncing off its 200-day moving average at about 1624. So a sharp move from these levels is most likely to be seen over the next 2 or 3 days. What else is running away? Anand Rathi Wealth, 2455. Sakshi, you would remember about 3.5 months ago, both Mr. Rathi and his CEO were with us discussing earnings. At that point of time, the stock was somewhere in the vicinity of 800 to 900 rupees. From there, a single pointed rally. We are seeing financialization of savings being very, very well awarded and rewarded on markets. Anand Rathi, CDSL, BSE, Motilal Oswal Financial Services, Angel One, Share India. I can go on and still there will not be a let up in these prices. Bajaj Auto, by the way, 5761, and an old market favorite, ITC, coming back into action after many months. Let's draw the chart of ITC and just get Nilesh's view. A sideways to falling trend since 498, which is Sakshi, the end of July, 31st July, and nothing at all. This flat structure on the charts, Nilesh, what is it telling you?
I think there's some technical glitch and we've lost Nilesh audio, and but we'll try and get him back just if we can before the markets shut shop. But of course, ITC coming back will also give a lot of breather to all the investors who've been waiting for a it's been lying dormant for a huge break now. But let's look at some of the other stocks as well. That have been on a moving spree. CG Power clearly 19.99%. That's the top mover on the Nifty 500 basket. eClerx Services, we had discussed with all our guests this today. We're also talking about Corborundum Universal as well, 7% higher. AG's Logistics, another 5.5% move right there. So the logistics majors are also doing very well. We have FDC, Gland Pharma, Balrampur Chini, Aarti Drugs, Jamna Auto, GlaxoSmithKline Pharma as well, Iris Life Sciences. A lot of these second rank pharma names that are also doing very well. And let's not forget from the large cap basket to track Titan again. Of course, 3 lakh crore rupees market cap, record high levels, and even today going strong at 34.28. From the time it got listed until now, Shell, you will be the best person to remember about Titan. 46,000% kind of a return has been seen on this stock. So, somebody who had that stock at that point in time may have been like chilling at Maldives all the time right now.
Sakshi, I can assure you, except for the promoter group, nobody has that kind of, how should I say, wisdom, foresight. And, the fact that you just have to stick around. If you're a promoter, you can't exit. So those quality stocks which have made supernormal interest returns are the ones that have made promoters billionaires. I honestly don't think so. There is an IPO holder of Titan, although I will be the happiest person to meet him, touch his feet and learn from him. But for the day, Sakshi, 2 stocks that close at their day's high, and one of them at a record high is Bajaj Auto, Buland Bharat ki Buland Tasveer, and of course Bharat Forge again plays on the word Bharat. So with that, we'll draw to a close, ladies and gentlemen, today, it being Wednesday. Tomorrow is the weekly expiry of the Nifty, and it will get into the final leg of the November's FNO expiry. Keep an eye out on auto stocks, keep an eye out on pharma stocks, and keep an eye out on IT stocks. Sakshi.
Right, so the Nifty shut shop at 19,812, manages to creep higher than 19,800 mark for sure. So that's a bit of a breather, and the heavyweight counters like mentioned by Shell, they have been clear supporters, IT, auto, healthcare, and them being likely flavor of the season. BPCL remains the top gainer today. Cipla follows suit, and Bajaj Auto, Infosys, NTPC, Hero MotoCorp. The top 5 movers as far as the top Nifty gainers for this trade is concerned. In the F&O basket, again, BPCL tops the charts. We have Z Entertainment, Balrampur Chini, Oro Pharma and Jubilant Foodworks as the other top movers as far as the F&O space is concerned. On the Nifty laggards front, let's also look at some of those losers which have not participated. IndusInd Bank, the top laggard, 2% down in trade. Kotak Mahindra Bank, Hindalco, Adani Ports, Adani Enterprises. We also have M&M and JSW Steel as those that have lost some ground in trade today. Sectorally, IT, auto, healthcare and FMCG, the top movers in trade. On the downside, you had small caps that dropped 1.2%. PSU banks, metals lost their sheen and realty stocks also declined in trade right now. So that's as far as the market wrap up for you is concerned. Many thanks for joining us onto this special edition, but do stay tuned onto Business Today TV, as even beyond the markets, there's a lot to track in the world of business. So do stay tuned for that.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.